Get ready before life happens. The podcast helping you navigate life's what ifs.
Welcome to Get Ready Before Life Happens. I'm your host, Tony Stewart. Today, I'm joined by Diana Perkins, founder of Trading with Diana. Diana, welcome to the podcast.
Thank you so much for having me, Tony.
Yeah, great to have you here today. Tell us a little bit about yourself. What is your origin story and how did it lead to you creating Trading with Diana?
Yes, so I was first exposed to the stock markets in college, and we had a virtual stock exchange competition. And I'm very competitive, so I wanted to win. And in order to win, I had to learn how the stock market moves and select trades and be able to track my performance. And that was my first exposure, but I knew right away this is what I wanted to do. And this was about 25 years ago or so. So I'm dating myself a little bit. But back then they had pit trading. I'm 5'2", I'm female. I thought this is probably not the way to do it, but someday I'm going to go out on my own and do it my own way. So I got my CPA, my degree, a great corporate job, and then 10 years into my corporate career, I took a step aside. I learned how to trade stock options professionally. And during that time, I mentored and coached hundreds of aspiring professional traders. It was the best part of my day. And then fast forward about 15 years or so, I now run a trading education company where I work with professionals in all areas of their investment journey, those who are brand new, never placed a trade in their life, to those who've been trading derivatives contracts for decades, like myself. So I work with everyone, meet them where they are, and I love it. It's my passion.
That's awesome. What's so great that you're able to do something that you're passionate about is, when you mentioned pit trading, I went back is I did get to go on the floor of the Pacific Stock Exchange once, and it was crazy. It's just like, I can't even imagine doing that.
Yes, yes. I did one time perform mock trading in the S&P pit, and people actually thought I was a professional trader. This was really early on in my trading career, and I also have a background in audit, so I remember auditing the numbers, and I got us up to second place. Like I said, very competitive. You're right. It's just there's just such like an energy, that just this excitement, but I feel like that still exists even through online trading in the markets and being a participant.
Yeah. So, for people watching and listening, what we're talking about is, on the floors of stock exchange, people used to, I don't know, do they still, I guess they still do on the floor of the New York Stock Exchange. They still actively buy and sell, right?
Yes, in a limited capacity, but most of the trading is done electronically now. Mhm.
Oh, okay. Yeah. So it makes me think for everybody watching and listening, check out Trading Places and you can get a good overview of what the trading floor is like. It's sort of chaos from what I remember. So anyway, we should probably switch gears. As much fun as that is to talk about, is one of the things you talk about is asking questions. Why do you think asking questions is a key life skill?
Yes, I mean it's how you learn. It's how you move from being reactive to responding. I always say in finance, ask as many questions as you need until it's black and white, because that's how you build confidence. It's how you make more informed decisions and better choices. I think it was Benjamin Franklin that said, an investment in knowledge pays the best interest. And I agree, and that's why I focus on trading education. And it all starts with that curiosity mindset, and that's how you master really anything you want to achieve or any skill in life.
Yeah, I love that. And it's something that I talk about as I think is the most fundamental thing we can do as financial educators is to help people ask questions and to be curious. And people can't become financially literate if they're not curious about their money is, we can give them all the resources that we have. And unless they're curious, that they're not going to proceed. But as you mentioned, it's that asking questions where they're engaged and they're learning. And we think about that with anything we've learned along the way. It's because we were curious about it. If we wanted to learn how to play chess, is we were curious about learning how to play chess and ask questions. So I love that you're centered on the asking questions.
Yep, absolutely. I mean, it's how I learned. Investopedia was my Bible when I was first learning how to trade, and I was on there multiple times a day. I still jump on there sometimes, but it really is how we learn. And it's true. There's really no, dumb question, and sometimes we don't know what question to ask. And that's okay too. And that's where you can seek out kind of the experts in the room. Or, I mean, there's so much information out there. I know it's hard to navigate, but it is there. So it's a great starting point, especially around finance and money and understanding what that next step is that you should take.
Yeah, I mean, we can mic drop there because you nailed it. It's finding out the right question to ask. If we don't ask the right question, we're not going to get the right answer. And that's the thing as well, is that, sometimes people are asking a lot of questions, but they're not the right questions. They're not getting the right answer. And I saw that over and over in my career as a insurance consultant, is that people didn't even know the questions to ask. So they're asking all these questions, but they're irrelevant and not going to help them get to where they're going. So it's all about asking the right questions. Um, a big part of trading with Diana is about working with women. Why do you feel that women oftentimes don't engage with their money?
Yeah, I think it comes down to a lot of like the messaging, conditioning, and misinformation out there. I think, a lot of women feel that, finance is something to be outsourced, or it's only for those, the Wall Street bros or those with a finance degree, or, you need a lot of money to start, or there's all these, it's kind of almost misinformation out there, and it's really, I mean, it really is false. There are studies from Robinhood, Fidelity that support that women actually generate better investment returns than their male counterparts. So there's no reason that women should not participate in the stock markets. That's where the money is. It's empowering, and it is for everyone.
Yeah, I love that. And that's something, that a lot of guests have shared on here, is that women oftentimes may feel that it's just not for them, but that the traditional roles, the man goes out and invests the money, and the woman may balance the budget at home. And so the stock market has been more of a male dominated, um, I guess, area, for lack of a better word. But I think that's the big key. And I think the other thing that's super important, people have heard on a show many times, is that most women will be in control of their money at some point in their lives, either due to longevity, widowhood, divorce, and the great wealth transfer is that women are going to be in charge of the majority of money in this country in the next however many years, depending on the study you read. That one I'm not so sure about, but it'll be at some point.
Yes, absolutely. So right now, so women control about 85% of household spending. So we'll start there. And the year that I've heard most often, 2045. So in about 20 years, the Great Wealth Transfer, for those who aren't familiar or haven't heard of it, it's in the net over the next 20 years, they're anticipating $124 trillion to exchange hands through things like inheritances and deaths and whatnot. And about 70% of that money is expected to go to women. So worldwide, about 30% of the world's wealth is controlled by women, which was actually higher than I thought. After this transfer happens, and it's not, overnight, this is over time, but after this occurs, it's anticipated it'll be almost at parity, 50-50. So it's a huge shift coming. So Tony, your podcast, it's right on point. It's getting ready, right, for that event and knowing what to do, how to invest your money, not being scared, having a plan, and leaning into that. Because again, it's finance. It's for despite what you've heard, finance is for everyone, and there's no reason we shouldn't all be participating in whether it's the stock market or bond market or high yield savings, whatever, wherever you are in that spectrum.
Yeah, and as you point out, right there are so many different layers to it. But what's important is to get started and to not necessarily worry about trading stocks, bonds, options, derivatives, as you mentioned earlier. Derivatives and options come much later and may never be a thing for most people, but they are. It's a continuum, but you have to enter somewhere, and the basic way to enter is with stocks and bonds. So, let's back up a little bit and talk about emotions. Why is understanding our emotions just as important as understanding the charts?
I love this question because I think what a lot of people don't understand about the stock market is that it moves on emotion, namely fear and greed. I like to call it organized chaos. And we see this in what's called the price action. So when you see those really big candles after an earnings announcement or Fed rate decision, and we call this very volatile, right? There's a lot of big price swings, and it's greed and fear. So if you think about maybe you have a position in a company you really like, maybe it's an Apple or a Tesla or whatever that is for you, and you see the stock price appreciate, you see it go up and you get excited and you get a little greedy, right? And maybe you increase your position. But then, and it's normal, maybe it has some relief, some profit taking, and it starts to move down. And then you get a little nervous. And then fear comes in, and you think, well, I'll just hold on to it. It'll come back. And then maybe it goes down further, and it's, panic, and it's that push and pull, that greed and fear. And the best way to mitigate it, as a spoiler alert, is to have a plan. Know where you're exiting before you go in. So, but just managing though those emotions when you're in the market or doing anything really with your money, that's what gives you the edge. You can have the best trading plan strategy or investment strategy of anyone, but if you don't have the discipline to follow it, then you lose that edge.
Yeah, I love that because it is with anything, even whether it's with money or anything, is not panicking. I mean, Warren Buffett says it best: is be fearful when others are greedy and be greedy when others are fearful. And we can look at firefighters as an example of people who are running into the fire when everybody else is running away. And it's like, but they go in and they have a plan of action to what they're doing. They're not just running into a fire blindly. And maybe that's a little bit of an extreme example, but if you have a financial setback, do you panic or do you have a plan? So, that's why we talk about maybe an emergency fund, rainy day fund, whatever word you like to use. Some people don't like the word emergency fund. I'm not a huge fan of it because it's not necessarily an emergency. Things happen. Like we had some extra costs to repairing our car yesterday. It happens. It's not an emergency, but it is extra cash that you have to come up with. So it's being prepared and not panic and go, oh my gosh, we have to come up with more cash. It's like, yeah, it's just part of life. And so, yeah, I love that it's all about fear and greed and managing your emotions.
100%. And I do call it an emergency fund, but you make a good point with the car repairs. But that's yeah, it's so important. It's honestly it's just peace of mind. It's peace of mind.
Hmm. Yeah, and it gets to exactly what you said. An emergency fund is having that plan in place for when something goes wrong, because we know that something is going to go wrong because cars come up. We have medical emergencies. People lose their job. These things happen to all of us. We've all lost a job. We've all had a medical emergency. We've all had an unforeseen car expense. It happens. So, but being prepared is key. And like you said, is with your investment portfolio, especially, is to not panic and sell. That's how people lose money. Um, or buy at the top of the peak because you get greedy. That's the other way people lose a lot of money, is by getting greedy. So
Yes, I think the statistic is 95% of day traders lose money. And a lot of that is, if you think about if you're watching every single tick of how the stock price is moving, and then you almost have a reaction with every tick. And oftentimes that causes over trading and you're buying and selling, getting in and getting out and getting in, and you completely lose perspective on what you're doing. And that's it's a very dangerous cycle. I mean, I focus primarily on what's called swing trading, like a few days to a few weeks. But really it translates to, it could be day trading, could be, what we call, position trading, which is longer term, buy and hold. But the principles are the same. You have a plan, when you're getting in, when you're getting out for a profit or getting out for a small loss. And then I always say it's, when trading, when it becomes mechanical, like that's when you've made it, because it just strips out the emotion. So treat it like a business.
Yeah, well, and that's when math comes into it, is, like you said, is you set your marks and everything else. And with any type of good plan, you have to have flexibility built into your plan. But, like, let's say you go on vacation, and you're driving from spot A to spot B. Usually you have, the hotels you're going to stay at, the route that you're going to take. Most people don't just decide at random to go in a certain direction. Some people do, and that can be fun, but, most trips are planned out to some degree. And so it's that same principle of, having a plan for doing a thing and then sticking with your plan. And, it's a great strategy. So, how do you help empower women so they gain the confidence to invest?
Yeah, so when I first started my business, I ran live workshops both in person and online called Building Wealth with Confidence. And I kept the classes very small, under 10 women each. And essentially, we walked through terminology. What's a brokerage account? How do I open one? Where do I start? And I had women, most of the women that attended my session had zero experience in the stock markets, like running for the hills when they hear the word stock market. And many of them left the session, opened brokerage accounts, and placed their first trades. And these are people who, don't, hate money management, like not into it, but but that's how accessible it is. So that workshop was number one out of the gate. I'm now actually in the process of recording it, so it's more accessible to more people that can watch it on demand. So coming soon. So that's Building Wealth with Confidence. I've also ran speaking engagements, workshops for local female founders groups, entrepreneurship groups, and thinking, your business isn't your only asset, or the income that your employer gives you, how to put that to use, how to make it work for you. So I have that as well. And then I also have a collaboration with my former trading firm where I learned, and I work with their female traders, aspiring options and currency traders, as that extra layer of support, because there are so few women in this industry. So it's great to have someone as a sounding board, bounce ideas off of. And I will say, whether it's women, whether it's men, I mean, it's the mission, the principle's the same. It's, break down that complexity, demystify the markets, trading, and really put a plan together to get started and get involved, because you want time on your side.
Yeah, I think what you just said there, time on your side, is such an important factor, is that we forget that time is one of the most important variables in investing, and that a longer time horizon tends to lead to better outcomes, because it smooths out market volatility, which you talked about earlier. Is stock market, it's very random, makes me think of a random walk down Wall Street. Just, you don't know which way the stock market is going to go, no matter how much information you have. It's sort of its own creature, as anybody will tell you who's ever looked at the market. It's like predicting it is impossible.
Yeah, yeah, it's pure speculation. That's why I call it the organized chaos. And to your point, I mean, the hardest thing to do in the stock market is time it. So if you start early and start often, I always say. So, you start early and it smooths out those returns over time. But most importantly, the concept of, compounding, compound interest, compound returns, where you have $100 invested, 10% return. Well, now you have $110 a year later, and then 10% return, and it keeps snowballing. And that's really how you build wealth. It's how I started, and I built wealth and was able to leave my corporate career. And if I can do it, everyone listening can definitely do it.
Well, that's awesome. And it's awesome that you're providing resources for that. So, one of the things is that, as we talked about, is women oftentimes don't engage with their money, is sometimes it's also imposter syndrome. How do we start to overcome imposter syndrome?
Yes, imposter syndrome's a real thing. And it's interesting because in my experience, I've seen those who are like the most capable and most skilled and the most experienced are the ones that tend to question themselves the most. So when it comes to imposter syndrome, I mean, there's an old adage, it's the greatest antidote to fear is action. So it's definitely taking that first step. But the whole premise of imposter syndrome is, well, maybe I'm not worthy. There's a limiting belief behind it. So the tool that I've used in the past that I would recommend is think back about your experience and times in the past in your life where you've overcome that fear. So I'll give an example to illustrate. So say you've been with the company 10 years and you want to negotiate a raise, and you have the experience, but you see some of your colleagues, you're like, man, they seem so confident, maybe they deserve it more. Go inward, think, okay, but I have 10 years experience. I have this skill set. Maybe you've closed these deals, or maybe you've built certain relationships, or maybe the customer is coming to you because they trust you because you've done, great things in the past. Maybe your reviews are excellent. Maybe your staff, you're the go-to, or you're supporting your manager in a way that others just aren't. And start focusing on those things, and then it's almost like a snowball effect, right? And you start to focus on all those times that you've done it before, and you were either successful or you learned something. But now you're moving from a place of experience, and that's a position of strength. So it really comes down to your mindset, identifying that limiting belief, flipping it on its head, and then thinking through what supports the exact opposite, and then you put a game plan together and get that raise.
That is awesome because I think we all go through that to some degree. Imposter syndrome is feeling like, we can't do this or we don't quite deserve this. Or it's always so easy to say, that like, we shouldn't ask for a raise because we don't want to rock the boat or we haven't quite done what we think we've done. But the flip side is, like you say, is, when we inventory our assets and our accomplishments and other things, is we've actually done sometimes much more than we think we have. And so it's, but just naming it, um, but also feeling like we're worthy of it, because it's easy to say, we don't deserve a raise. But if you don't ask for a raise, is you have to ask for things quite often in life.
Yes, I'll take this a step further. There's actually an exercise. I'm not sure if you've ever heard of the 50 stack. That rings.
No.
Okay. So I'm going to continue the example that we're using before with the raise. So say your limiting belief is I'm not worthy for this raise or this increase, maybe it should be a year out. So the first step is to flip that belief on its head and say, you know what, I am worthy. I deserve this. I deserve this rate increase. And then the next step, what you do is you write down on a piece of paper a list 1 to 50, and then you think through 50 different reasons why that new belief, you deserve this raise, is true. So it could be you got a great project review on an account, you have a unique skill set, you're the go-to for customers, and that's really valuable. And ultimately, that belief, that new belief that you're worthy, that's essentially your tabletop. If you picture a tabletop as your new belief. And then those 50 reasons that you came up with, Those essentially are the legs that support
Mm.
that tabletop. So the idea is if you think about one of those reasons and you're like, maybe, that I don't feel like that's true today. You have 49 other reasons, other pieces of experience that support that belief that you deserve that raise. So you read that list every morning until you believe it because you have no reason not to because you have 50 reasons that support now is the time and you're worthy of it. So that's called the 50 stack, and it's a way to retrain your mind with a new belief that just washes out the limiting belief until you're absolutely convinced and you know that you're ready.
I love that. And it expands beyond having just one or two reasons, which is easy to overcome in your mind and say, well, maybe that one's not accurate. But when you have 50 is, that's a lot. So, but as you point out, it's about retraining your thinking on a certain subject and starting to believe that it's true. And all these things help reinforce that. Um, Beliefs. That's a great strategy. So for people watching and listening, I'll go out and find some links to that and throw them in the show notes so you can check that out. So Diana, to wrap up, I have what I call the Get Ready Hot Take Trio. These are three quick questions I ask all of my guests. The first one is, what's one money myth you're trying to break?
Oh gosh, there are so many when it comes to trading, but I would say probably the first one, I know you're laughing because it's so true, but the first one I would say is you need a lot of money to get started in the markets. I have a gentleman in my building that has $7 invested in Nike. So with fractional shares, it's possible. Most accounts, brokerage accounts like Fidelity, Robinhood, Schwab, $0 account minimums. There's no commissions to trade a stock or what's called an exchange traded fund or ETF. So you can really start with $10, $50, whatever you have, and just get your toes wet. Start to invest in maybe what start small. But that barrier, it is so low. There's no reason all of us shouldn't be invested in the stock market.
Yeah, and that has changed so much. So for people who are more have been around for a few more years is it has changed. There's not trading fees. You don't have to trade in lots of 100 stocks like you used to. I mean, I'm going back quite a ways there, but it's like Diana mentioned, you can get started with like you said, $7 and invest in fractional shares. You don't have to buy a full share of Nike or Tesla or whatever. um, that is not an endorsement for any of those. I wouldn't invest in Tesla personally, but you could do it if you wanted to.
Yes, 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 yes. Definitely aren't endorsements, but I do believe in when you're just getting started, like investing in what you know. Maybe you work in, I have a client in biotech and she likes to invest, follow that sector. So yeah, so whatever that is for you. I know the technology sector, there's some that are a little more volatile, some love that, some are won't touch it with the 10-foot pole. So it really becomes so personal. And I'm sure you've seen this too, Tony. I mean, investing, trading, just that relationship with money, it's emotional and it's very personal. So it's really about what you feel comfortable with, what your risk tolerance is, and maybe what you know.
Yeah, I love that with and to know your risk tolerance. So, there's a lot of questionnaires you can do. And I know if you open a Schwab account, you can do a risk tolerance questionnaire. And, they even have uh, I can't remember off the hand, intelligent portfolios that rebalance for you based upon your risk tolerance and things like that. So there are a lot of tools out there that can help you on your path. So Diana, let's get out the time machine for a minute. If you could go back in time, knowing what you know now about trading and money, what advice would you give your younger self?
Ooh, well, I've always loved money. And I've been pretty good with it, I would say. I started saving when I was around 8 years old. I had my first savings account. And then in college, I learned about money market accounts. But it really wasn't until my mid 20s that I started investing in the stock markets. Actually, I'll share with you. I don't think I've ever shared this with anyone, but I had a family member give me a secret small stash of cash, and he told me to invest it in the stock markets. And he said, if you do well, there's more where this came from. Don't tell anyone. Between you and me. I said, okay. And that's when I started investing my own money in the stock market. And so if I had a time machine and went back and could go back in time, I would have started investing in the stock market specifically sooner. Now, I mean, 8, 9 years old, you might not be able to
Yeah.
do that. But it's what we were talking about before. They say it's not timing the market, it's time in the market. And that's really where you build wealth. So if I could change one thing, it would be taking that money that was growing in savings, later money market, and investing it in the stock market, probably like an index fund like SPY, VOO, VTI. There's so many of them, but investing in one of those really early on and just letting it grow.
Yeah. No, I love that. And for people watching and listening, of course, we can't build you a time machine to actually go back in time, but it's something to think about with your kids. Get them a small investment account and let them do it. I did it for my son when when he'd get birthday money and, other money is we opened up a very small Schwab account. And again, I'm not endorsing Schwab here, just who we happen to have an account with. And, I let him pick some stocks. We talked about it and things he liked. And so, of course, he bought some Disney stock. Not, but like you were talking about, not a large amount, maybe like $100, $200 of it, and it was fun for him. But it got him engaged in thinking about the market and investing and all those principles. So when we talk about it, and you're talking about helping your kids with financial literacy, is hands-on is a great way to do it. So
Oh,
love
that
that
makes me
advice.
so happy, Tony. I didn't know that. And I mean, there are programs like Acorns or custodial accounts, and I know there's a slew of other Green Light. There are, so many ways where young people can get started. I'll share when my first job out of college, it was an accounting firm. I mentioned the CPA, but even then, I found ways to educate others. I would go to inner city schools and I would teach about the stock market and how it works and these young children eating their pizza and I'd and I'd draw a little chart and say, talk about, about the price and investing and building wealth even then. I just love it so much. And I love that you're doing that for your son.
Yeah, so it's great. So these are all things that you can do with your kids. So to wrap up, what is your number one tip to change the way we think about money?
Mm. I would say, and this is a big mindset shift for a lot of people, but it would be from moving from a scarcity mindset around money, so which eventually becomes your reality, maybe paycheck to paycheck, or I don't have enough for this type of vacation or this or that, into an abundance mentality. You can always make more. You can negotiate that raise. You can go to another employer. You can learn a new skill set. I feel like we have more control over our financial situation than we realize. But it is a mindset shift, especially if you're experiencing some of those things. But if you think, but maybe I can do X and that will help my future self. And so, but it is a mindset, it's abundance. There are other ways to make more money, to credentialize myself, or to be smarter, about expenses. Maybe I don't need this right now because I'm building something else for the future. So when you think of money in an abundance way that I can earn more, I can gain this skill set, you start to think of that way. And again, you start to focus on the future and forward looking and how you can take control and take steps today to go there. It's not easy. It really isn't, depending on your situation, but we can all do it on some level.
Yeah. Well, I love what you said is that we have more control over our financial situation than we realize. I think that is the important thing. And, like you've talked about through this, is you can take small steps. And going back to the very beginning, is you have to be curious and to ask questions. You can either be passive or you can take an active role when it comes to your financial life. And as you point out, is maybe it is cutting back on expenses a little bit. That doesn't mean you have to give up your daily coffee. Nobody's saying that. I hate that advice. But, maybe it is just maybe not getting a daily coffee, maybe do it 3 days a week, save a little money when you can. But like you said, is that we have that control and you can go to night school and get an extra degree. You can look for a different job. Sometimes you're stuck and that happens, but you can always be looking for new ways. And it may not happen right away, but opportunities do tend to crop up when we least expect them.
Yes, they do. And related to that, another big mindset shift I'll share is, and this is something that helped me really early on, is most people they will save or invest their money, whatever's left over after they're spending, but then there's this like, feeling of guilt, right? Sometimes,
Hmm.
depending on what you're buying, maybe it's that cup of coffee on repeat. But if you think of it in terms of saving and investing first, and you can just automate it so you never see it, saving and figure out maybe it's $100 a month or X amount for your 401k from your employer. But if you think about it as saving and investing first, and then spending what's left over, um, you can spend guilt free because maybe you're ideally maxing out your 401k or at least the employer match. Maybe it's $200 a month or whatever that is towards your emergency fund or in your brokerage account. And that's all done. And you can automate all of that so you never see it. And then what's left, you have your fixed expenses and then your variable. There's some of that's discretionary because I do believe in treating yourself guilt-free, and that's a great way to do it.
Yeah, I love that, and that's what we do as well. And it changes it because then you don't have to stress about it because you've already paid your expenses, you've already saved what you need to save to be on track for your savings and investing goals. And then it's just the money that's there. You can spend it if you want to spend it without feeling guilty about it or feeling stressed about it. So it is freeing as well. So Diana, where can people learn more about you and trading with Diana?
Yeah, so the best place is my website. It's tradingwithdiana.com. On my site, you'll find a blog, great resources. And if you're interested in getting started in trading or you're already active in the markets, I'm also offering free calls. We can talk about your goals and how to get you started or how to put some more structure and discipline around what you're currently doing in the markets. I'm also very active on LinkedIn and Instagram at Trading with Diana and would love to hear from you.
That's awesome. And for everybody watching and listening, as always, there will be links to Diana's social media profiles and the Trading with Diana website in the show notes. So if you have access to the show notes, check out the links there. Diana, thanks for joining us on the Get Ready Before Life Happens podcast.
Yeah, thank you so much for having me on. This was so fun. I love talking to like-minded individuals in finance. And Tony, I love what you're doing around financial literacy and education. It's amazing.
Well, thank you. I really appreciate it. And it's guests like you that make it happen. So appreciate your time and your insights. And thank you, everyone, as always, for tuning in. If you learned something today to change the way you think about money, please be sure to subscribe and to share with a friend. You can also go to my website at tonystewart.com to join the Get Ready movement and get access to my newsletter and free resources. You can also get ready before life happens by changing the way you think about money.